Options. Are they cheap? Are they expensive? The answer is yes. There are options that are both cheap and expensive. Now, when you look at the VIX, it's hard to say that because the VIX, which is a one chart look at the overall options in the S&P 500, it will tell you this. All right, I look at, for instance, anything below 1250, we start to get really, really cheap. And this becomes really kind of a warning sign for the markets as all of a sudden greed has shifted to the bullish side. Sentiment has shifted mostly to the bullish side, and options in the S&P 500, and I'm talking about options on the S&P 500, are very, very cheap relative to where they've been. This chart is for 2024. By the way, this bull camp up here, this goes way above 30. This goes actually up to 80. I just took that big spike out to show you where I see bullishness, bearishness, and neutrality. So you've got a bullish camp below 1250, bullish camp above 2250, bearish below 1250, and neutral in between. But you have to look at this. If you look at this with the stock market, you look at with a flip side. Anything in this camp is bearish for the stock market. Anything above 2250 becomes more of a bull for the stock market. Again, there's an adage that goes like this. When the VIX is high, it's time to buy. When the VIX is low, it's time to go. We're getting into that low point, and I believe mid-January, we may see super lows as we get into Inauguration Day, and then I think then we get some pullbacks in the stock market. But this is what anyone who is starting to look at options, when they try to determine, well, what makes an option cheap? What makes an option expensive? The easiest thing to do is to go look at the VIX. The harder thing to do is what we do. All right. So again, novice option traders, they don't even look at option value. They look at the cost of the option they're buying and they say, wow, that's cheap, or wow, that's expensive, without really understanding the value. Most option traders look at the VIX. We look at 4,000 optional stocks. We take a minimum 1 year range of their own option value and not the overall market itself. Let me show you what I'm talking about. This is a ranking of cheap IV. So we look at each of these stocks and we look at their low and their high. Let's call it their VIX. Okay. Each optional stock has its own VIX, has its own options ranking. And so we look at the range of the last year. Cheap options are ranked by the low to the high and where it is now. And if it's close to that low, it's considered cheap. And so what we do is we compare that to the 1 year range. This is today's cheap options. I want you to look at the notables. Yes, NEM is very, very cheap. Yes, Fitbit, very, very cheap. PanW, again, very, very cheap. These are all on 1 year lows. Take a look at Apple. I highlighted Apple because it's a stock that everybody talks about. Everybody knows. I don't think there's a single day on financial news where Apple is not talked about. Right now, Apple's high implied volatility, its high range for the year is 38.18. Its low range for the year is 16.63, and it's at 17.18. It's very, very close to its 1 year lows. So is TLT. We just talked about TLT. TLT's low because it's getting very comfortable sitting in the sideways range. The NASDAQ, the Qs are low for the year, and Google is low for the year. So we're seeing a lot of tech on this top 10 list. Very, very cheap options, which means if you're bullish on any of these stocks or any of these symbols, buying calls makes the most sense. If you're bearish on any of these symbols, buying puts makes the most sense. Take a look at Apple. This is what I'm talking about. Look at the stock. The trend is up, yet this black line, which is options implied volatility on Apple for, this is just the last 6 months, but the last year, we're close to the lows. We're just bouncing off the lows for the year right now. So if you see Apple moving higher, buying calls might make sense to you. Take a look at the expensive options. These are ranked the same way, but these are the ones that are hitting their very close to their 1 year highs. Okay. So when you look at these, you look at like, this is Norvo. This is the GL1P. All right. The Ozempic, Wegovy drugs. This one's interesting. I'm going to show you a chart on it in a moment. Breeze is on here, AXSM, AI, United Healthcare is on here, right? United Healthcare is on here because the CEO got assassinated last week. And now, and what's happened since then is that healthcare companies are taking down their information off their websites of all their executives so that they're a little bit harder to find, right? Because they're concerned that this could be something more than what we saw last week. But what you're seeing is what do these all have in common? Take a look at NVO. There's their high, 53.46. There's NVO's low for the year, 23.99. The current is 53.46, meaning that NVO is sitting on its highs for the year. Here's a stock of NVO. Look at the chart. We hit come close to 140 twice, and then it fell down. And as it's fallen down, implied volatility, option traders have got a little bit more nervous. This earnings report came in, didn't do much, and it fell back down. But look how quickly it climbed back up again. And now with earnings 58 days from now, this thing is sitting on 1-year highs. So when it comes to options, we're looking at cheap and expensive options. Again, we measure each optional stock to itself for a minimum of a year, not to the overall market, right? Again, 1-year data. And last but not least is that these don't measure directional bias. They only tell you if the options are cheap or expensive. You have to do the homework on the trend or on the contrarian theory or on the seasonal theory.